GM. Should we kick this thing off?
GM, let's go.
Alrighty, amazing. Let's do this. Welcome everyone to the Spaces. My name is Crypto Amaru. I joined from the Crypto Paradise account, so not my personal account, but anyway, it is me. I'm here along with Michael. We got Matty Greenspan, who I've known for a long time. EasyMM team. Excited to be here with you guys today. On the agenda, real world assets, crypto markets, bull market, or maybe more bear market. We'll have to see. We'll get your guys' take on everything. What's going on with this correction? What do we think July holds for us? And then also, what is everyone building? What are you guys up to? I mean, the fact you're still here building in crypto despite this, 8 or 9 month crypto winter, pretty damn impressive. So we want to hear from you guys what you guys are building. Whether it has to do with RWAs or not, it's all good. So with that, why don't we kick off with some introductions? We can maybe go around the room. I'll just go from kind of like right on down. So that would lead us to Matty. What's going on, Matty? Good to see you, man.
Hey, dude, how's it going?
Yeah, going great. Good to see you. We've been on calls together. We've been in groups together. Funny how that works.
Yeah.
Some of the OGs. But why don't you introduce yourself for folks who don't know you, and also what you're building these days?
For sure. Hi, my name is Matty Greenspan. I'm the founder and CEO of Quantum Economics. We are a community of builders, developers, investors, and content creators working on the most exciting things in Web3, AI, quantum computing, you name it. And if it touches financial technology, we're there. Currently supporting more than a dozen startups, and we've got lots of weekly conversations or daily conversations on X, content going out, and we've got our own AI agent who analyzes markets, and a company that mines Bitcoin using stranded gas, and of course more to this space, quantum assets, which is tokenizing mineral royalties on the blockchain. So basically, a very cash flow rich source of passive income that high net worth individuals have been utilizing for decades, if not centuries. It's basically owning the rights to oil and gas before it's drilled, and then as it's drilled, you just get a paycheck every month in the mail. And so we're putting that on the blockchain to where people just hold an NFT and they're able to get those royalties directly into their digital wallet. Obviously opening up the opportunity to everyday people from as little as $250, rather than just people who know how to do this stuff and have tens of thousands of dollars to invest in it and time and patience. This is more focused on retail and people who want to generate income.
Awesome, man. That sounds about as RWA as it gets. Oil and gas on the blockchain, very cool. Sounds like you've done a lot in crypto, do a lot in crypto. I know that's absolutely true, so happy to have you here. It's good to always have OGs in these conversations. I want to turn it over to EasyMM. If you don't mind, introduce yourself, what you do in this space.
Yeah, sure. So, hey everyone, my name is Daniil. I'm CEO at EasyMM, and what we do basically, we help projects with managing their liquidity, bringing more traders to the tokens, and boost their activity. So basically, we are market makers, and moreover, what we also do, we run demo days, RWA days. So we help projects on the early stages or projects in RWA space to showcase for investors and broader community their projects, their use cases, and their ideas. So yeah, we're still working on crypto make great and get more projects onboarded, get more investors onboarded, and everyone can make more money on that.
We need that, man. We need more retail back. More investors onboarded, more retail onboarded, everyone can make some money. I definitely have some questions for you as a market maker. It's great to have a market maker in the spaces because you guys have kind of a front row seat to what goes on in the exchanges and the order books. And so I have some questions for you about, this market, these market moves and whether it's manipulated and so on and so forth. But we'll get to that in a bit. I want to turn it over to Dapper. If you don't mind introducing yourself.
Hey, thanks for having me, guys. I'm Dapper, and I'm building the xTrader protocol, which is an OTC protocol. I've been building it. We started it roughly 5 years ago, and it's just been a slow, ongoing process until we get to the point now, obviously, where tokenized equities come into play, and we've kind of niched around that and have been just trying to stay up with the growth of the overall tokenized equities and to be able to continue to support that until more and more so that OTC becomes a need daily. Obviously, you don't need it right away. Most people don't need it on a daily, but OTC is one of those things where when you do need it, you really do need it. And we're working on a institutional program as well that brings in compliance feeds for institutional trades. So that's pretty much how we're riding it out right now. It's a primitive. I mean, we keep it pretty simple, honestly, and just go slow and follow what you guys are all doing, so that we know how to, make our moves and how to work the app so that it's going to be the best for everybody to use.
Got a true builder here. Sounds like building it for 5 years. Sounds like what you're doing is a little bit similar to Shift. So I'm curious to understand the differences. But with that, why don't I turn over to Michael and you can introduce yourself and what you're working on.
Absolutely. Hello. Great to be here. Great to see all the great speakers. And hello, Crypto Paradise, Amaru. Great to have you with us as a host. I'm Michael, one of the co-founders of Shift. Shift is an RWA token issuer, bringing fully backed stocks, ETFs, and bonds and other financial instruments as fully backed native cryptocurrencies. Currently deployed on Solana, on Jupiter. About 40 million TVL and growing. We just crossed our 700 user mark today. So really interesting times. We're now running with a batch of leverage ETFs, which give a bit of leverage and zero liquidation risk. So really interesting these days to check out this new batch that Shift deployed. It's just a month ago, and we continue deploying more assets, SpaceX 2x long and SpaceX 2x short. And of course, there's an airdrop around that. So check out our socials. Very interesting times at Shift.
Hell yeah, man. Congrats on the user adoption. That's a big milestone. I think you guys will continue to get more users. And I want to hear more later in the spaces about this leverage with no liquidation risk. That sounds pretty attractive. So we will we'll get to that topic, I'm sure. But let's just start with this, because you guys may or may not know, we go live every day, me and my partner, and we talk about the markets. We also banter about other stuff, complain about taxes, all that good stuff. But we talk about the market. We're at a real junction here, a real crossroads, you could say. Bulls versus bears. So where do you guys stand? Like, do you guys think we're going lower? Do we get to the bears? I don't know. I'm seeing 53K being talked about as what could be the low. Or do you think the 58,000 that we hit, that was the low and we were finally going to go higher here in July? Maddie, why don't we start with you, my friend?
Yeah, you're getting right into it there. The price prediction. Yeah, I don't have a crystal ball. Actually, my wife made me throw away the Magic 8 Ball. I don't know why. She just didn't like it anymore, I guess. It wasn't giving us good results. Let's just say that. Yeah, no, I mean, we're sitting at a low right now. I would be very hesitant to think that the bottom is in. And the reason for that is actually quite positive. If you'll journey with me for just a moment. what's happening right now across all markets is a huge rotation, more like a foundational shift into AI. And everybody lately has been realizing the power of AI. People are feeling enhanced by AI. I myself, I become a full stack coder in the last 8 months, where I had no coding experience before. Now I can put together entire platforms, and I'm doing so for the fun of it. And I think that, everybody listening, everybody in the room has probably felt the massive impact on their day to day and how much more we can get done with AI. And so, what tends to happen in markets is that, these type of, trends build up slowly at first, and then they tend to snowball. And with AI, it's been building. I think since ChatGPT first wrote that blog post, everybody probably remembers that revolutionary blog post that wrote itself on ChatGPT, and then everybody was using it like the very next day. Suddenly put AI back into full focus for everyone. And so since then, increasing percentage of new investment money or fresh dollars for investment have been channeled into AI. And we're now at the point where investors are getting so euphoric about AI that it's coming out of everything. So it's not all new money, but what can we sell in order to put more money into AI? And so, until now, as far as the world is concerned, in institutions, generally speaking, I mean, the yen has been the global liquidity thing. So if you want to borrow against something, you're going to borrow against the yen. Now the yen is at, 40-year lows. I wrote about this in today's newsletter that just went out an hour ago. And so the narrative that Bitcoin is digital gold, I think that that's not exactly correct anymore. Bitcoin is not digital gold. It's actually a digital liquidity pool. And we're seeing this play out in real time where, you need money for building AI? No problem. You've got reserves of Bitcoin that you can sell in order to fund those new positions. And so, now that there's, now that Wall Street and all these institutions have built up that portfolio, well, now they need that money, and so they're cashing in. And so this is actually, this is good for Bitcoin, as the meme rightly states. It's showing that Bitcoin can be used in a much more mature way as a source of liquidity when needed, and then storing liquidity when not needed. And that's actually goes to the heart of what Bitcoin is meant for. And so that's basically what's happening. I give the AI bubble maybe just 3 to 6 months before it all comes crashing down, because, valuations have gotten ridiculous. I think the Micron was up like 49 times earnings or something like that. We discussed on a previous space. That's wild. And so, though investors are, they're herd animals, and they're like, what's everybody else investing in? They see what's going on around them. They don't always sit there and make the calculation of how much the return is going to be on every single dollar. And that's where people end up failing, is when they put Anthropic, at $800 billion valuation on under $50 billion in revenues, and then ignore something like Walmart, which has, $700 billion in revenues and is only trading, around 750 in its market cap. Don't quote me on the exact numbers, but I'm just trying to give a comparison so that you understand that investors are so head over heels for AI that they're not really doing the math at this point. And so we've seen this happen before, specifically in the .com bubble, when investors was like, it's got an internet handle, let's go for it. and they didn't make any differentiation between Amazon and Pets.com. And obviously we know the history of that. And so yes, AI will continue to get more and more useful, and the technology will continue to progress, especially with all this new money that's coming in that will go directly into research and development, a lot of it, and a lot of it will go to buy yachts for some people and vacation homes, and apparently fund, $30,000 prostitutes who know how to talk about AI in the Silicon Valley.
I saw that story as well. I'll stop you there because,
Go ahead.
I think you made some great points. I think we can all agree that AI is sucking up a lot of capital right now. That's clear and obvious. I guess the question is just, when does that rotation happen? When does that? I don't know if, is it a bubble? Is it just frothy? Is it just a bull market? Who ultimately knows if it's going to end up coming crashing down spectacularly like we saw with the .com era, or maybe a lesser of a correction. Doesn't matter. Point is, eventually it will slow down and capital rotate somewhere else, maybe hopefully back to crypto. I guess the question is then, have we already maybe started to see that? Was the launch of SpaceX maybe like the top of that AI trade? We're now seeing OpenAI saying, hey, we're not even going to go out for our IPO. I don't know what Anthropic's doing. And I saw news today that the open source versions of these kind of AI products are also coming to market soon, which may also slow down the run. Well, we'll see. But eventually, don't you think, and I'll ask this to EasyMM, don't you think money will eventually flow back into crypto, or are we just doomed to sort of irrelevance forever?
Yeah, I don't like to make some predictions, but I definitely support the idea that AI sucked all the capital and liquidity, especially from retail market. And this valuation are crazy. So, in my opinion, when the premium fades, and we see the correction of AI hype, then capital go back to the more traditional assets. And I don't talk about the crypto overall, but like if we talk about Bitcoin, I'm extremely positive on it, and other commodities as well. And here RWA will be will get all these benefits because we will see the Bitcoin grow, we will see gold, silver, other commodities will grow. And of course, we get more liquidity in Web3 space that will spread across mostly RWAs, because it's not just another meme coins, hype narratives. It's actually underlying assets. It can be like tokenized bonds, real estate, commodities, stocks. So they will benefit from that. And the question is not will we see it? The question is when we see it. And I think that we will see more pain and maybe Bitcoin at, let's say, 40, 45 mark, but it doesn't matter. Like in 2-3 years, I expect it will be much higher.
Yes, that's the interesting thing about this discussion of where it bottoms out. No matter who you talk to, it's kind of crazy. Everyone, even the ultra bears, are saying in 1 to 2 to 3 years, whatever, it's going to be far, far higher. I've noticed that, right? Like, there's no bear that's like, oh, it's going to zero. Last, crypto winter back in 2022, or you were on even like 2018, I think there was a decent amount of bears who were like, crypto's definitely going to zero. No one's saying that anymore, which I think is progress. I think that's progress.
Yeah.
In any event, Dapper, I wanted to turn it over to you. Thoughts on the market, 58K the low, or are we going lower?
I'm not a heavy trader myself, but, from my perspective, I guess I could say that I really thought it was going to be like the 40-45 mark too. I am expecting it to drop a little bit lower myself. I don't have a lot of technical expertise on the trading side and overall markets. I kind of live in my little builder bubble. Obviously, most of you guys understand how that works. I'm kind of trapped in this little bubble where I'm building things, and I reach out every now and then and try to see what's going on with the rest of the world. So as I'm playing like catch up and I'm realizing what's happening overall, I've positioned myself for it to go a little lower. I'm sitting on funds just waiting for that moment. Hopefully I didn't miss the bottom. I am, either way, I've positioned myself well, but I agree with that 40, 45. And I think within 18 months, we start to see a huge turnaround.
There you go. Okay. Well, hopefully you're able to time it and buy that dip. I wouldn't though. If you're waiting for the perfect entry, the exact bottom, nobody ever gets that right.
No,
I want to start DCing.
I already am in. It's just, I've already been buying as it's been dropping and, positioning myself nicely either way.
Good.
I just keep that bag of, that bag of stable on the side just in case I see something ridiculous drop down and I'm just like, yep, that's happening. Just scoop it up then and
No,
little
that's
bonus.
wise.
We'll call it the bonus. That's the bonus bag.
Yeah, no, look, honestly, look, there's no perfect way to do this. No one ever catches the exact bottom, the exact top. DCing while keeping like a bag for emergency like capitulation events. That's kind of a smart play, I think. Michael, is there a bull among us? Michael, are you bull? Am I the only one who thinks 58K was the bottom?
First of all, apparently so. Second, I am such a bad trader. I mean, just, my kind of, even it's funny, my life events. I started my career in a .com company a month before the .com bubble bursts and they fired everybody. Well, except me, which is an interesting story in itself, but not for today. And then I joined crypto in October 2017, right? You can imagine, okay? 2 months later to get it all blown in my face. But I said then, and people were like, damn, this is done, guys. We're done. 90% of the traffic was down. People were like, let's go home. I said, guys, it's going to make 100K and then it's going to make 1 million. I'm not saying when, and I'm not saying it won't go down in the middle. And how low will it go? But it will go there. In the end of the day, that's my simple belief. Once again, I'm such a shit trader. I buy really high and then I sell low. They panic. There's a reason I'm doing RWAs and not trading crypto. I really have bad experience with this. And I'm a builder and I'm a tech guy. I'm definitely not a trader, so no advice here on that. But I'm a strong believer in the long range on Bitcoin. No matter what, my belief is that, Mati is so much more technical, but I'm stupid, I guess. That's my simpleton belief is that the 21 million Bitcoins and the churn rate and on the other side, the join rate of people maturing to an age where they can learn about crypto and Web3 and Bitcoin and free money, I think is higher than the churn rate. I don't know, guys. That's like my simple, dumb analytic of why Bitcoin would reach 1 million no matter what, no matter where, it goes in the middle. It just has to. But, that's just my theory. I was right. I was right on my first. I made my first mark, the 100K. I made it. And people were like, all right, that's nice.
No, Bitcoin
let me see.
That's 2 more halvings.
Yeah.
4 million Bitcoin has already been lost. There's really only 17 million Bitcoin total go around. There is 300 trillion in total liquid assets in the world, guys. That includes equities, U.S. and foreign, bonds, money markets. Gold is a $30 trillion asset. Bitcoin's only 1.5 trillion. We're the digital gold. We're better than gold. More utility, more use case. Gold has 5,000 year head start, but Bitcoin is superior in every other way. So Bitcoin will reach 1 million. I hope you guys aren't not buying Bitcoin now because you're trying to make a little bit extra. I think DCing, let me tell you the bull case for the next remainder of the year, right? One of 2 things need to happen. And if both of these things happen, we're going absolutely to the moon. 1, Clarity Act. Clarity Act, which is the law that the U.S. looks like we're trying to pass Seems like it's almost there. It's going to define and clarify a lot, which is legal and illegal around the crypto industry, Bitcoin, Ethereum, ICOs, all this stuff. I mean, it's hundreds and hundreds of pages of legislation that is in the process of trying to get passed. Looks like now the banks are on board. Crypto industry is obviously on board. Republicans are on board. There's 7 holdouts now, or we need 7 votes. Let's say it, but that's more accurate. 7 additional votes from the Democrats to make that become law. Apparently, once it becomes law, trillions are sidelined waiting to come into this asset class. That's what like the big wig Wall Street guys have been saying when they go out on CNBC, etc. Trillions are sidelined waiting for Clarity Act. So Clarity Act happens. Trillions won't come in the day later, but it allegedly will eventually make its way into crypto. And Bitcoin's, remember, only a $1.5 trillion asset. So it doesn't take a lot of capital to make it go up. So that's one thing. Second thing, the new Fed, Kevin Warsh. The reason why I think we had that big sell-off, it happened in equities and it happened in crypto, was Kevin Warsh came out in the last press conference and was very hawkish, meaning he was like saying he's sort of insinuating they may raise rates, which we know when money supply becomes tighter, risk assets suffer, right? People flee the risk assets into safer things like money markets because they can get good returns there. But if Kevin Warsh and the Fed decide to change course, they're like, oh, wait, oil prices are actually way lower than they were during the Iran war. Inflation isn't really as bad as we thought. Okay, now we're talking a little bit more dovish now. Or, gosh, imagine if they actually cut the rates towards the end of this year. That would be another massive catalyst to basically bring us up out of this bearish period. So one of those two things have to happen. If both happen, I think we rally majorly. But if neither of those things happen, then yeah, 45K, whatever. Who knows how low it gets. Hopefully that won't happen, though. All right, that's my little spiel on where I think the market, and that's the bull case. That is the bull case because I'm a perma bull on Bitcoin and crypto, and I will always forever be bullish because it's changed my life for the better. But it did take requiring holding through these difficult times. So take that for what it's worth. All right, I want to turn over to actually what it is you guys are building. This Spaces is about RWAs. Maybe you're building some RWA, maybe you're not. Doesn't really matter. Maddie, let's start with you. You talked about oil and gas. So what is that product? Is it something that people can use now? Are you doing a token sale for it? Give us the rundown.
Yeah, thanks for asking. So, Quantum Assets is basically a product, as I mentioned, that has been in the traditional finance for many, many years. Just not a lot of people know about it. One of my partners, Doug Hardwick, has been in the oil and gas industry for more than 30 years and specializes in finding assets that conform to a very specific investor desire, which is that passive income. And so the way it works is, in the United States, there's a property can be broken into 2 different ways. So you can own the building rights, so you can build a house or a building on top of the land. But then the other side is the subsurface right. So you own the minerals that are extracted. And so what Doug and his firm are specialize in is finding properties that are already producing oil and gas, and looking for the areas where they know that these billion-dollar companies are operating on, and then by purchasing those parcels of land where they're already plentiful, you're basically reducing a lot of risk because you know that there's going to be a monthly income from it because it's not you producing it. It's ExxonMobil and some of these bigger oil producing companies. And so by holding on to that asset, you're just basically getting a monthly check. And it's something that Doug has always thought of as soon as he heard about blockchain technology. He said, okay, well, these mineral rights, these are the apex, and this is the right thing that needs to be tokenized. And as soon as he mentioned that to me, it just made a lot of sense. And so we're now in the late development stages of this. We've set up an internal funding round for qualified investors, to get it off the ground, because there is some capital required as far as just inventory and legal and marketing. The company's already set up, the website's already set up, the technology's already set up, and so now it's really a matter of inventory and marketing. And so, yeah, I mean, that's basically what it is in a nutshell. I mean, every time anybody tells you, okay, RWA, you're right. If you look at what's printing RWAs at the moment, a vast majority is U.S. Treasuries. And if you look at RWA.ABC, you'll see that very clearly in the graph. Hold on a second.
Well, treasuries aren't too exciting. I'd rather invest in oil and gas. But what's cool about your product, I think it is like that perfect, let's call it, example of RWAs. It's taking something that previously, you could not invest in really as a retail investor.
My apologies. I have to hop real quick. I'll be right back.
No worries. And it's now on the blockchain, which is super cool. So I like the product, man. I hope you guys are able to raise funds and build that out and complete that. I guess he had to jump off and deal with his dog or something like that. But all right, we actually have a new speaker here. Someone I know dearly, good friend of mine. Space for, going on a freaking decade. Wow, we're getting old, aren't we, Phil? Good to see you on the space. If you can introduce yourself and Mellow, and then maybe let's get your take on the market too.
Hey, mate, good to be here. And bloody hell, yeah, we are getting old. So I think now it's my 11th year in crypto. So, yeah, as anyone knows, that's equivalent to like 110 years in real life. And, whilst I'm only pushing 50, unfortunately, crypto has made me look 80. I appreciate the introduction. It's a shame I missed a bit earlier. I've actually been on the spaces for quite a while, but my request was to see when you were talking about the markets, you've got to be the only one thinking that 58k is the bottom. Just before I go into Mellow, it's definitely going lower as far as I'm concerned. There's nothing short term that could ignite it that's coming soon enough. We had the bearish MACD cross earlier on in this month. We're just about to break another key support now. My prediction is 43k. That's where I believe the bottom will be. And that's where the technicals are showing me as well. So I also believe that the bottom is going to be in October. And then I also believe that what we're going to have is we're not going to have a V-shaped recovery. It's not going to be like a black swan event. It's going to be a case of we'll reach the lows and then we're going to have a sidewards grind for a good 3-4 months. And that part of the market is actually an important part of the cycle. For the people that haven't been pushed out by the continuing downtrend, there's nothing worse than that to be followed by the sidewards action that bores people out and, really gets them to the point of non-belief. And that's when things really start to go up, isn't it? It's when people, stop believing that, there's a chance of that recovery. That's what needs to happen. So, yeah, I'd love to say that 58k was the bottom, but 43 is definitely going to be my prediction for you there.
All right, well, I'm the only bull left. We'll see who ends up being right. So here's what's interesting to me about this debate. If everybody now thinks October is about, because that's like, 4-year cycle would basically indicate that, and all the lines on the charts and everyone, all the sentiment and all the retail is betting that's going to be the low. When has the market ever done exactly what everybody thinks it's going to do? No,
pretty much every year since it started. Yeah, I get what you're saying. But there's the two ways of looking at it, isn't it? Is the market driven by the cycles? Are the cycles still intact? Or actually is it not driven by the cycles and it's purely, the external events? I'm a big believer in the cycles. And yeah, I think that the problem is that most people, when it hits that bottom, I'm going with the 5th of October, by the way, I can be a little bit more precise. But when most people, it hits the bottom, even though most people are talking about it being the bottom, very few people actually believe that's the case. Yeah. And when we get this sideways action, the sideways action is an absolute killer for many people, and it makes them make the wrong decisions. All of a sudden, we're down at 43K. Of course, there's going to be the people calling the potential for it to go down to its next area around about 25K. So you're right in what somebody said earlier. Very, very few people will time the bottom, but there will be some, and they will be very, very, very heavy hitters, without a shadow of a doubt.
Yes, that's what you want to buy the dip, folks. If you can time that exactly, good luck to you. We'll see where this cycle goes. This cycle's been weird, though. I mean, we hit an all-time high before the halving. I like to remind people that it's been bizarre ever since that. The top of 126K, that was far below what I think people would have believed to be the case based on prior runs. So it's just been a bizarre cycle. We'll see if it ends up playing out like the bears think, or who knows, maybe the one bull here I will be vindicated. 58K is low. We got a lot of people on Polymarket betting that we will actually hit 57.5. There's a lot of money right on 57.5 by like tonight at midnight. June, right? June is going to be 57.5. So we'll see what happens. Why don't we switch gears a little bit?
Yep.
You see Maddie back. EasyMM, I wanted to get your take on something that I'm seeing circulating on X, kind of a conspiracy theory, maybe. I don't know. You're a market maker, so I assume you're kind of in the order books. You're seeing what other traders are doing. You're seeing what the exchanges themselves may be doing. General question for you. Like, what do you think is the level of manipulation happening in the markets? Is that a major factor, or is that just a conspiracy theory?
So it depends, and it depends mostly on each exact case. So of course we can see some manipulation activity, especially on assets where circulating supply less than 5%, let's say. So it's easy to manipulate when you have only a couple percent of money on the market. But it's not only about crypto. You can see the same with SpaceX, by the way, because the extremely high valuation based only on that they have only 5% as a circulating supply. So you can basically inflate the price whatever you want. So yeah, like on assets like Bitcoin, Ethereum, some big things, I think it's more organic way. Of course, like it's more about psychology of people, of traders. And when you have leveraged position, you like liquidate it. So that makes cascade of liquidation. And we see this movement by inertia. But overall, like if we talk about big assets, they are pretty organic in their patterns. What we can see on some specific cases, it depends on the tokenomics and market supply available at the moment.
Yeah, no, we're not. I mean, I'm not talking about that. We know the ones that have like a 5% float, controlled by team and freaking KOL. So those are always going to be manipulated almost by definition. But no, I'm thinking more about like Bitcoin, ETH, the big assets, because I mean, with the prevalence of leverage trading, you could argue there is an incentive for these exchanges. They make a lot of money on leverage trading, for them to kind of be in the markets too and counter trading people and things like that. And there currently is no real laws against it, or if there are, they're not enforced. But I guess you're not seeing that on your end, on the Bitcoin side of things.
No, we don't see it. Like as I mentioned, it's it moves mostly on like there's only manipulation that based on some people with high influence on the market, like Michael Saylor, Elon Musk, Trump, and so on. So of course, when they sell something and do something, it can make some movement, but that's it. Like if you have some leverage position, even big ones, you cannot inflate the market or manipulate the market. It's impossible. It's too big to do that.
Interesting. Cool. Great perspective. If anyone else wants to jump on that topic, feel free. Otherwise, I do want to get back to just RWAs generally, because that is the title here. The question I have for you guys, RWAs, I think, means different things to different people. Like, what is your guys' definition of RWAs, and then what are you doing, if you're doing anything in that sector related to it? Maybe Michael.
It's so wide. Yeah. I'll just jump in because I feel that these three letters are being thrown around the room so easily. While there's everything from T-bills to stable coins or RWAs, T-bills that are backed by, T-bill tokens that are backed by T-bill actual T-bills. And up to houses and cars and anything you want to tokenize, credit or debt or equities. And it really is so diverse and so wide between crazy return, super risky private credit, junior tranche, right? In a Brazilian market, just throwing around something that we've been looking at. And then you have a REIT company in the US, which is real estate. And you have, on the other hand, the Pokemon card. So these are RWAs. These are all equally RWAs, but it's really like, let's talk about really how, I guess it's interesting for me to talk about. I hope for you guys as well. How TradFi and DeFi are kind of diverging and converging. I say osmosis all the time. The law of chemicals blending in with each other as time goes by. So there's a lot of, I think, curiosity on the institutional side as they see things getting more efficiently done via stables, via crypto. And of course, we have regulators coming in with more clarity law, just fun, but really more clarity. And so institutionals are actually jumping in where retail may be a bit dormant. I think that it's really interesting to see what is going on a bit more B2B side. So from my point of view,
I guess the question for in my mind for you is RWAs just those things like T-bills and currencies, real estate, or are you looking at a wider universe? Like, at what point does Bitcoin become an RWA?
That's a real interesting one. I mean, the whole concept of real world asset is actually translating something that is, it used to be not tokenized. And once again, it's such a wide word, right? You can tokenize most anything. You can tokenize air, carbon, CO2. Etc. You could tokenize rights to IPs, to songs, to whatever. It's just too much to even categorize under the same roof.
It's basically stuff that can be tokenized.
Bro, stuff that can be tokenized. That's why we can't say RWAs and stop then. I mean, when I define shift, I kind of put a boundary on what we do is we take financial assets, ETF, stocks, bonds, etc., and bring them as fully backed tokens. But I'm not doing cars. I'm not doing real estate. I'm not doing IP. I'm not doing diamonds. I'm not doing so many things. Maybe I will in the future, right? But I am trying to be focused on a niche, which we believe is growing. I think that when people say RWAs, most of the time, they understand that there's, between those real estate and those stocks and there is a gap, and there is different niches. So we kind of focus on the financial tools and actually bringing a lot of things that weren't available on DeFi to DeFi. For instance, today we're doing an experiment with stock options, like options on chain that are based on our tokens, which is really interesting because that is such a huge thing in TradFi and does not exist in crypto at all. So is there any room for it? Will there be product market fit? Will there be buyers to this, new kind of, I guess, asset or tool that wasn't available before? And we're doing a lot of these experiments. That's just an example, which I want to mention actually because it's running right now. So if anybody's interested, talk to us. It's really
Well,
cool.
that's the name of the game for any startup,
Yeah.
right? You launch something, you try to find product market fit. If not, you move on to something else. But I think that does sound logically like there would be some demand for it. I do want to ask Phil a question because he just jumped in. So, Phil, I know you're building a trading platform. I believe it trades a multitude of different types of assets, some of which I guess are quote RWAs or not. I don't even know how you define it. But just tell us about the platform. What is it? Why'd you build it? How's it going so far? And what's the plans for it?
Yeah, sure. I mean, this has been a labor of love for me. So I built my first trading algorithm when I was 21. I'm now pushing 50. So when we're looking at time spent to get product out of the door, that's a hell of a long time. So I guess what we've built has only been made possible with AI. I know earlier, everybody was speaking about that, but the thing is that data is the key to everything, and humans can only process so much data. So there's only so much you can do. And where a lot of the systems that I built in the earlier days failed, wasn't potentially on the actual system itself. It was on the gaining of the data and the processing of that data. So around about a year ago, AI got to the point where I believed that I could take all of my experience and using AI come up finally with systems that would not only work for a short term, that would work on any market over the long term. So we've been building now for just coming up to a year. So background, those that don't know Mellow, it was a meme coin. I took over the meme coin with the community. 2-year anniversary is coming up in, I think, 3 days. But I wanted to try something different. I wanted to basically bridge meme and utility. And we've tried several other things, as you know. We've built, bots that can create volume. We've built very, very high spec raiding bots. But this is one that I believe is going to really be the turnaround for Mellow. All of those other products were charging people for things that they could actually get for free, but producing something that was a much higher level and a much, much better level. And of course, because we've been in the bear market for so long, the one thing that people don't want to do is pay out. They want to be able to earn and create an income. So the bot started off, the algo started off, being built in TradingView. And for anybody that knows TradingView, it's got massive, massive limitations. It can't see the data that we need. It's got very, very, short-term amounts of data. It's also ridden with bugs, but that was the building blocks for us. We then moved the systems over to MQL5. That gives much, much more accessibility to the better data, the longer term data. And what we then did is we took the whole thing and we moved it across to Python. And Python has given us the ability, using AI, to do some crazy things that were never, ever possible before. So what we've managed to do is take the original strategy, and then what we've been able to do is, using Python and AI, is to do testing on virtually every single pair on every single time frame, but utilizing lots and lots of the different inputs. So just to break that down a little bit more, you know, back in the olden days, we used to do this manually. Yeah. So, you know, you might have, say, let's say, for instance, you've got 10 different inputs that can change the characteristic of the algo. You could basically only test a certain amount of those combinations, because if you can imagine, against all different pairs, against all different timeframes, against all different inputs, you simply would not have the time ever to be able to test it all out. So we've been building the actual algos for around about 8 months, but the testing phase and the optimization phase has actually been 4 months on top of that build phase. So what we built is we built our own Bayesian optimizer, and that is a tool that can simply run through the real charts as it happened over the whole of the history. And whilst it's doing that, it can tweak the inputs, and that then gives us hundreds of different strategies on exactly the same algo, on exactly the same pair, on exactly the same time frame, just using different inputs. Now, a big issue with that is over optimization. It's very, very easy to find a good setting that's going to work for 6 months and that will never ever work again, or a setting that is, you know, not grouped by other good statistics. So it's kind of like an outlier. It's kind of a one-off. And what AI has given us the ability to do is to take the data, to process that data, and to test that data, but at the same time as trying to find the best parameters to install systems to make sure that we cannot get any overfitting. So we've also created our own Monte Carlo simulator on Python as well. What we then created is a portfolio analyzer. So it's been through a process where it does walk forward testing, it does out of sample testing, it does Monte Carlo testing, every single bit of testing that you can imagine. And what pops out of the back end of that is strategies that have the best optimization, the best settings, but have been filtered to make sure that they're safe over the long term and tested as far as they could possibly be. So just to give you an example of how many iterations this could come to, the original scan that runs through the optimization across 49 different pairs, and this is gold, metals, indices, Forex, energy, it's a wide range. We had around about 275,000 different strategies. And the strategies, what I mean by that is the different input settings. So once that had been through all of the out of sample, walk forward testing, Monte Carlo testing, that figure dropped to 8,200. So as you can imagine, the vast majority have been rejected because they just didn't pass. What we're then left with is solid systems that we need to decide what to do with each other, because if you're just running one system, you get the results of that one system. But if you can intelligently pair systems together for non-correlation and lots of other things as well, you can decrease the drawdowns of the portfolio, increase the profits, smooth out those equity curves. So the second tool that we built was the portfolio analyzer. And what that does is it actually reproduces every single trade of that strategy that's passed, records all of the data, and we then built a portfolio builder that reads all of that data, and we will tell it what we want to find. So let's just say, for example, we want a mixed portfolio. It's going to be conservative, and we're aiming for under 10% total drawdown XYZ. and it must have this level of, correlation. So that will then run and it will pull together the very best portfolio to meet those requirements out of all of the systems that passed all of the different types of, back testing and walk forward and out of sample testing. So yeah, we're literally about to launch. It's been a year in actual development of this particular system. It's been 35 years in development overall. And we're excited because what we've come out with is we're going to be launching a conservative portfolio. We're going to be launching a balanced portfolio. And then, of course, this is crypto. We're also going to be launching a higher risk, higher return portfolio. But we're also going to be launching a portfolio which is aimed directly at funded accounts. And this is an area that's blown up massively. It's a case of you can open a funded account, you can buy an account for probably around about $800 that gives you the ability to trade with up to $200,000 worth of capital. But you've got to meet certain very, very strict requirements. And listen, somebody else earlier said that they're a really poor trader. The reality of it is that 90% of the population are. If you go onto the brokers' websites and you go onto the funded accounts, by law, they have to tell you the amount of people that lose and the amount of people that actually make money. And I think the average statistic is, 75% of people lose everything. They make zero profit over time. So what we've built is something that can either be accessed by direct signals, where you can have the ability to trade them yourself. We've also got automated systems. So we've partnered with a broker, and they are going to be allowing people to join, to open an account, to fund their account and have sole access and custody of that account. We have no access to withdrawals or anything at all. And the broker will actually just copy trade our signals directly onto the user's accounts. And then, of course, we've got the funded account set up, which is going to be coming in very, very soon. That is going to be signals only to begin with, because the one thing that the funded accounts don't like is winning algos. The reality of it is the funded accounts, their business model is built on people losing. So there is a possibility of automating that, but it becomes a lot more technical. We've got to get to the position where we could potentially make changes to the trades so that not everybody is opening at the same time, at the same price, closing at the same price. And the reality of it is you've got to have a massive margin for error in your algos for that to be allowed. So it doesn't work on scalp trading. Our systems are swing trading systems. So yeah, it's super exciting. This has been a labor of love. We've got the best community in the whole of the space. Our whale group are so committed. It's been a massive downturn. We flew up, we took the project on at 40K market cap. We went to 16 million market cap. The bear market come, it pushed us all the way back down. We're currently sitting on about a 600K market cap, which for a meme in this space, to have longevity of 2 years with everybody still working and a vibrant community, it's just really great. This really is a community token. And, somebody mentioned supply control earlier and manipulation. Supply control is very, very important in lower cap crypto projects. And within the whale group, we've got such believers that have been buying all the way through the bear market. Our whale group currently holds well over 65% of all of the tokens. So unlike most projects, we've actually been growing. So we went down to an 80K market cap at the bottom. And we've been on a steady growth rate over the last few months, now sitting at about 600K market cap. And of course, the way that we've done the tokenomics is to access these systems. It's all based around the token. There's going to be buybacks, there's going to be burns, there's going to be funds for digital marketing, liquidity provision, and a whole host of other things. So yeah, we are literally, I'd say, a week away from the first release. And I can't wait because coding, testing, and doing all of this, it's been a 15-hour a day, 7 days a week job. And yeah, the whole community is looking forward to getting this launched.
Hell yeah, man. Thank you for that. Detailed overview. Yeah, I can attest pretty much everything Phil said because I was there on like day 3 of after Phil took it over CTO 2 years ago. Been holding my bags, watching it grow, watching it go up, down, evolve, change, different products being launched and built. But I do think the trading platform you guys have built, the trading product is, far and away the best product you guys have ever deployed. So I'm very excited for it as well. Community, man. Yeah, the community. Can't say enough about the Mellow community. Shout out to all the Mellow followers and supporters who are here in the chat. Been through a lot all together. It's amazing to see everyone stick together. And I will say this, at $500,000 or $600,000 market, I think massively undervalued relative to what it is you guys are building. And once that new website's out, once the platform and the product's actually launched, I think you guys go far, far higher. So good work, Phil. Hopefully it's all about to pay off. And thank you for that detailed overview. We haven't heard. I want to turn it over to Dapper real quick because we haven't heard too much in terms of what is your build. I know you gave a little synopsis, but tell us what you're building, and also is there a token involved, or is just the product?
We've stayed away from building a token out for the time being. I think if you put yourself in a position of needing an over-the-counter trade, Alice to Bob, if you're just trying to trade directly with somebody, not involving the liquidity pools and so forth, you need a trustless way to do that. And that was a fundamental that we went with many years ago. And we just said, that needs to be just a primitive fundamental. It protects everybody. If you hold assets, you will always be able to sell them to your neighbor. Okay, no matter what that asset is, whether it's an RWA and so forth. So that's really what it was built on, is like that OG ethos of, I should always be able to trade assets with my neighbor regardless of what they are. Now I know the RWA thing, like we were all discussing, it is such a broad thing. Obviously when you have like I'm involved in some stuff with mineral rights that's tokenized, but I don't hold tokens for that. A lot of that stuff happens on the underside. So there's that, you have that kind of RWA instance. And then you have, like with what Shift's doing and those tokens, and Michael can attest, he's walked through our app that uses our protocol, and it's very simple, very straightforward, and to the point for what's currently publicly available. And that is, if I want to sell you something, I can put it in, it's essentially an escrow. Okay. It's all it really is, with defined parameters. So I can create that escrow and sell it to Michael, or vice versa. Directly for whatever asset that I'm asking for. And I think it's simple. And that's why we've considered it a primitive. Like in my head, it's something that we should be seeing in wallets. Like you can swap in a wallet, which is going against the liquidity pool, but who handles the OTC? And a lot of the reason I believe that the development of that side of things really hasn't been prioritized overall is because there's not a lot of income to be made off that. There's not a lot of revenue that's there to grab right now. Whereas in the future that we expect that will be different. So we've really kind of made a long play, which is why I said we're on a slow grind. We looked at the long play and said, at some point, there's certain days where $1 trillion moves OTC on a given day. And that's just, completely off of the grid. It's off of the liquidity pools. And I mean traditionally, not in crypto yet, obviously. But that's kind of where we're gearing up for, is the more and more adoption happens, the more tokens I'm adding to our app, and support for the protocol, and making sure that people can move, all tokens really, but we kind of niche the app towards equities, because I deal a lot with traditional people and VCs, and I consult and things. And when I go and talk to these people about crypto, they don't want to hear about random tokens from me. Okay. Their interest in my response, or their response to me, has been like mostly positive about when I start talking about, oh, well, you guys didn't know there was tokenized stocks, and everybody just loses their mind. Like, what are you talking about? So this is most of the time I'm just talking about that with people and explaining how that's coming and how it's already here really, and that it's growing and it's going to become more and more prevalent. And while at the same time, obviously our protocol protecting the fact of that fundamental ability to be able to trade with anybody you want peer to peer versus having that blocked out. And then obviously, there are some, regulatory concerns when you start talking about institutional trading. They have compliance systems. And that's what I was referring to earlier is we had to create this. That's what we're working on right now. And we are utilizing AI for that. And we're just grinding through that to try to create that product for what we, very traditional minded, but what it will need to be in the future of allowing institutions to be able to move OTC. Now, they do that now to an extent, but it's not at like a protocol level. It's not something that is just a standard of this is how people move money OTC. And or equities or any other tokens for that matter. So as far, I wear a lot of hats and I'm in, I build quite a few things, but as far as xTrader is concerned, that's what it's really about. And it's, we've really tried to keep it simple. I don't want to overbuild it, overcomplicate it. We're really trying to hold to that fundamental ethos.
Yeah, I mean, I'm of the mindset of if you don't need a token or token's not going to add value, probably best to stay away. But it sounds like a very cool product. I mean, OTC trading is very important.
I mean, maybe in the future, maybe we will have a token in the future. I don't have anything against it. It's just like you said, there's no reason for us to do it right now, and I don't want to do it obviously just because. So,
well, now's
we'll
a
see
hard
though.
time to token anyway, so
yeah, maybe a bad time to be launching a token.
Yeah, you gotta really want to do it. Otherwise, it's probably more headache than it's worth. I want to give Michael the last word here. We're over an hour. Appreciate everyone jumping in the spaces. Because Michael, you are doing a token. I want to learn more about that in terms of the utility for it, where one may be able to invest in it in pre-sale phase and then afterwards, and then also things like token economics. So all that around the token. I'm very curious.
All right. You asked a lot of questions. Let me start from the important one. What is the actual usage? So Shift token is used as underlaying gas or invisible gas every time an RWA is minted. So we pass on fees from the minting to the DAO. 50% of those fees are passed on. So that is the main driver for automatic buyback and basically lock of 2 years. We're still considering burning. But that is basically the connection between the RWA minting engine and the Shift utility token. So the community actually gains from those fees. The other utilities are more, common staking, obviously, and governance, decision making within the DAO, voting, etc. So more banal, but still utilities. I really think the interesting part is that the RWA minting engine is directly connected to this, and it basically creates a mechanism that keeps buy pressure on the token all the time. And we think, RWAs are growing at a massive rate. We are there for that boom. And so there's a lot of logic with it. Now let's talk about tokenomics. And we're currently at our third round, the private sale. So we had a pre-seed of 450, which was sold out pretty quickly back in 2025. Then a seed round, which sold out for $2 million, finished beginning of this year. And we're now in the third round of total of $3 million of raise, 30 million of DV. And then TGE is expected around October. I hope we can make that time. If not, we'll push a bit back. Obviously, market conditions will be a factor. But we're more looking currently at our traction and our metrics on the RWA side. So, getting more AUM, getting more volume, getting more users. That's our focus right now. And of course, the raise will be available. Well, not publicly. The private sale round will not be available publicly. But we may do a couple of campaigns privately or separately, not directly on, I guess, X or platforms like that. But we have a couple of cooperations, I guess, with groups. And I'm not sure what I can talk about right now, so I'm not saying anything specific, but we have a couple of things coming up very soon. If you're interested in learning more, totally talk to us on social, on Telegram, on Discord. I'm available on Telegram most of the time, so DM me, or not DM, just tag me in the community and I'll answer if you have a question. Um, Feel very free. Did I capture everything, Amaru?
I think so, man. I think you did. Strong utility for the
Cool.
token
Well,
tied to the platform usage. I mean, that's key, right? And the platform already has usage, so that's you kind of check that off the list.
yeah, maybe last but not least, the airdrop is running right now on season 1. Season 2 will be starting soon, but right now we're still running on the first season, which is very, very, I'd say, generous. So I'd recommend looking at that. I'd put it this way. If you're into buying the RWAs, now is the time to get a lot of incentives by us for those RWAs. That's
There you
simply
go.
put. Incentives don't last forever. I'll say it that way. So the earlier, the better. That's what I push for. So yeah, right now it's basically based on social activities, which are cool and fun. But the major things that I see as important are participation in holding RWAs themselves. There's a lot to choose from, so anybody can find their taste, I suppose. And then on the other side, there's referral programs, which are working very, I'd say, once again, generously towards people that don't have money to invest, but do have friends that do and want to bring them on. So
There you go.
we pay off very nicely once your friends actually buy some RWAs. You participate in those fees with us as part of that airdrop. So I definitely recommend doing that. If you're into that. And yeah, those are the major activities right now. There's badges, there's fun, there's a lot of different, little thread competitions or even poker nights and things like that. But it really is vast and a lot of fun. But it's all around the RWAs. So take a look, understand what that means, what our product means. It's, I want everybody in the community, if you can't buy it, that's fine, but understand it and, at least root for it if you're with us, right? So that's where I'm at.
Absolutely, man. I mean, I think whether you're talking about investing in Shift or any other project, could be a Mellow, could be any of these projects that have been featured on today's Spaces. Got to do your own research. Check out the site. Check out the product. See if you like it. See if it makes sense to you. Ask the questions. Jump in the Telegram. Talk to the team. Yeah, I think people. There used to be a heavy culture of DYOR, do your own research. It's kind of gone out the window the past few years in crypto, to my understanding, anyway. But no, I mean, Shift is doing great things. You guys are going to be here for a long, long time, building a great product. And I believe we're going to have some news around Shift vis-a-vis the Poolz launchpad here announcing pretty soon as well. So excited for that to go out. But otherwise, yeah, we're well over the hour. Appreciate everyone who jumped into the Spaces today. Hopefully we'll do it again soon. And as we like to say here at Crypto Paradise, we will see you guys on the beach. Peace out.
Thanks everybody for joining. Great time.